The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting day at TFNN and the Power Trading Hour. Each business, well, I wouldn't call it a business, each a trading day. And we will continue to do that. Hang on one second. Okay, just had something I had to take care of very quickly, and that is just going on here. Anyway, wanted to get to the market, which is already in progress. We are down 20 points off the worst of the lows. 1862.36 was the lowest of the low today on the S&P cash. We're trading out at 1868.55. And volume just a little bit better today, but not enough so far anyway to make me think that we've got some kind of huge movement down. And that will be just a hair under 2.2 billion shares for the day. So that would be interesting. So what we have going on here, we've got a nice little movement down here. We've got the bond, 10-year bond under 2.5%. Dogs living with cats, real wrath of God stuff going on, if you would believe CNBC and the other financial infotainment channels. But to me, this is expiration week. We haven't really gotten anything out here. Volume is not really significant yet, and any close above 1868 has been kind of the line of death, and we've occasionally closed below that, but not decidedly. We didn't get that 5 billion share day that told me everybody was throwing their hands in. I suspect that is coming, but I think we have a few things going on here. One is the move to the bonds. We're probably going to recover from that, I would imagine, before the end of the day. Of course, this all started, and as far as I'm looking at it, across the pond, it kind of came over here. The CNBCs of the world are all wonderfully trying to blame this on David Tapper and a few other people at the SALT conference from yesterday. But I think it has a lot more to do with options expiration, has a lot more to do with those bond movements, and a great deal of people that ran to the stern of the Titanic when the bow was underwater, now figuring out that they're going to look elsewhere for places to hide their cash. Is there anywhere they are thinking right now where we can go park some money other than get nothing back in the bank? And that's what is the conundrum for today. I think probably a little bit overthinking this. And one of the things I hate worst of all is the idea that there is a alternate history. The problem is, did the bonds going under 2.5% actually change something on the 10-year? Okay. But there is no alternate history where David Tapper didn't say anything and the bonds didn't move. So if the market would have gone down, maybe your argument would be stronger for David Tapper moving the market. But you don't have that, and placing blame scientifically, at least, or at least an attempt to, pretty hard to do. And probably one of the worst things that I had to get over early on, and for a while, I took a sabbatical about 5 or 6 years where I didn't watch financial infotainment TV. And I had to basically come along the CIA manual for analysis, where you were listening to all kinds of people putting out disinformation to really understand how to evaluate the information. And to me, a lot of who shot John, a lot of blaming David Tapper because he said something rather nebulous. I wonder if this is more of an issue where people are imparting something on the meaning of, let's say, like a song. Everybody will hear their favorite song, and it'll mean a lot of different people to other things. And then they'll ask the guy that wrote the song what it meant to him, and he'll say, I don't know, it just sounded groovy. I wasn't really thinking about anything. But everybody's come up with all kinds of reasons about his dead grandpa, or somebody got run over in the street, or there'll be a bunch of stories when actually nothing happened. They just kind of thought it was a groovy lick, and someone put words to kind of match it, and there wasn't a lot of thought into it. Everybody always thinks that there's so much thought into these things. Sometimes they're just accidents. The other thing I would talk about today is just what is going on in the market. As per is a 20-point move in the S&P cash, now 19, on the way down, truly significant. And to me, either a long trend is significant, or one huge move, even if it's intraday, would be. I give this example many times. It came originally in the 2003 book, Fooled by Randomness. But if you had a 100-point move in the Dow and a 500-point move in the Dow, pretty much at the levels we're at now, it's the 500-point move in the Dow is not 5 times the signal scientifically. It's 9.6 times the sign scientifically, or statistically, better word to use there. And it is tough for me to actually figure out with so much disinformation. Sometimes I just have to go walk the dogs and shake it off. But remember all the time, you're listening to a bunch of people that, one, don't trade stocks, two, get information to them. They don't have a lot of time to validate it. There's a few people on CNBC that have the time to get the story right. But I'd say 9 out of 10 times they read what's on the teleprompter, and the people that wrote what's on the teleprompter thinking about where to get their next slice of pizza, they're not really too worried about any of these things embarrassing them like a bad story on the front page of the New York Times. It is problematic. And that's just a little bit of that. But to me, a bigger signal out here would not be the 20 points or the 25 points. We were off one time, or 20, what was it? It'd be 8, it'd be 6. So the 26 points off on the S&P cash would be less of a signal to me than literally closing below the 1868 level on the S&P cash. And remember, there's a dyslexia, a cure for found. So anyway. Okay. Just reading a few things. And Andrew Heck is asking me if I've looked at the Ground Apes page when I have a chance. I think this is his son's website. And kind of I guess all of his sons were into comedy. One of his sons is a stand-up comic. I think, and that maybe, I wonder if this is the same one. But it's Ground Apes, and it's, I guess, a parody website. I did look at it last night, Andy, and it was interesting. Of course, Andy will be coming on after the show here, and I'll probably be talking a little bit about that expansion in natural gas and the move at the same time, which is a little puzzling, I think. Some people are, he's a stand-up. So a comedian is just a little different. So, that'd be it. Anyway, when we're looking at a lot of stocks out here moving, an interesting move, but certainly nothing that is just ringing out here to me. I would have liked to seen a lot more volume in some of these stocks. I made one play on a short squeeze, and of course I was on the wrong side of that one. So, was down 20 cents on it. I still think we have a market that could easily start moving up in light volume all the way into next Friday. That would be the bearish case. The bullish case would be for us to keep pulling down and watch all the volume go to nothing as we go into Friday next week. So this is going to be an interesting next 5 trading days. We're going to need to watch it close. I would, with options expiration, be a little tough into saying that I would read too much into this. Options were basically saying that we could go 10 points higher. We did that. They said that we could go as many as 50 points lower. I think we've gotten probably everything out of that. Over the last, last 2 hours of yesterday and today, what I am watching are people buying options for much higher expirations into June. So many people out here are looking at the bearish or the bullish case, and we could have a very bearish move higher over the next week or two, and that would not be anything new. And I could see where we could have, or what I would love to have to hang my hat on, which is a huge spike, maybe 30, 40 points in the S&P cash, not a lot of volume, kind of linger around there for about 3 days, all the shorts cover, and there we find that the top of the market is put in. To me, I would like that a lot more than thinking that we just rolled over here. If we do, I suspect that we are in just a lower trading range. I would love some kind of brilliant signal instead of one that right now is somewhat muted. Heard Tom O'Brien talk about on his show the same thing, which is, could we go back up here and retest this high one more time? And he thought, there's a decent possibility of that. I would like that and a little more, which would be that huge spike that would run all the shorts out of the market, because there's a lot of highly short stocks out here. I would love to see those stocks run, get squozen out, and then set the hook for the top of the market. Now, doesn't mean I'm going to get what I want, but to me, that would be a much cleaner signal than watching one here. Apple's off $5 today with 5.3 million shares. I would have loved to seen that $5 off with 10 million shares, not getting it. And that is the crux of the problem. A lot of these stocks down lighter, and of course, they're not getting the kind of volume we want. We're going to be looking at some of those and some others later, and we'll see what goes on. Andy's pontificating in my IHIM here about natural gas, and I'm sure he'll be talking about that in his show after this one, and pretty much a few other things. But we got lots of news to go in the second B block when we come back. And until then, we're going to exit stage left, hear a few Profit Center timeout, and be back with the snooze and some history to finish up. My 2 cents.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back in today in financial history, in 1911, the Supreme Court upheld the U.S. government's decision to break up John D. Rockefeller's Standard Oil Company on the grounds that it was such a powerful monopoly that it violated the rule of reason. And, of course, I think this is the first time in the U.S. that they did actually go after a monopoly. Of course, the one that I'll always remember was Microsoft and the browser monopoly, which was always dubious at best. Although they did use their power to force people into Windows Internet Explorer. But I had alternate browsers all along. It wasn't that you couldn't install them. It was that people weren't that knowledgeable about that they could. And, of course, there was a little bit of advantage to have them hook in to things that they made themselves, Microsoft I'm speaking about. But monopolies, nothing new. I always wonder when they're going to go after Google as a monopoly, but I think they pay off the right people, and not like Microsoft, who decided to stay out of politics and ended up getting scored for it. I think maybe some of these, or pretty much all these companies now know they have to pay off the political dredge. Of course, today, a lot of stuff moving the markets all out of this SALT conference. We talked about it starting yesterday. James Chanos, one of the few guys that I really look forward to when he does come on financial infotainment shows. I have seen him many times, and not braggadocious, and certainly not full of it as the proverbial Christmas goose. Where's that Thanksgiving goose? But anyway, he was out here today. He is, for those people who don't know him, is a famous short seller for finding all kinds of company, including Enron, and showing how it was basically a house of cards. He's basically talking about a few things, and one of the things you probably should know on some of these companies is how they spring load acquisitions. And they came up with this name when Tyco was making a bunch of its acquisitions in the last decade. And I think it was him and Hank Greenberg, too. But they purposely have the company that they're going to acquire throw in a bunch of horrible things to make the company look horrible. So when they take them over in about 6 months, everything is, just looks like, wow, this company's really starting to turn around under now that Tyco's bought it or some other company's bought it. But Chanos and Herb Greenberg came up with this term, and it's called being spring-loaded because, of course, it's going to pop, or at least it's going to look better than when they bought it. This is a reason a lot of the acquisitions look like they've been overpaid. That's the books have been fixed pre-mortem, so that they will look good at least for a little while and get everybody, especially the big activist investors, off these guys' backs. And, of course, basically Chanos described this as not as illegal, but then again, neither were many of Enron's off-balance sheet partnerships. But spring-loading misleads investors nonetheless. I just thought I'd bring that up. That was basically one sentence off of what he was talking about today. There's some more important things, but he's pretty good at honing in on where the weaknesses are. He does go long, too, but he is probably most famous for finding these giant frauds like Enron. And right now he's warning against people buying the huge monolithic gambling institutions in China, Hong Kong, over there. And it's something I hadn't thought of. I knew that China had been working very hard to get rid of money laundering. They don't want their cash leaving China. And what they were one of the first to go after Bitcoin, because Bitcoin was being used to get huge amounts of cash out of China into other countries where it may not be able to be taken from them. Remember, these are still communists. But apparently there is the money laundering scam of going to these places to gamble. You can deposit money on one side of the fence and run over to Hong Kong and get it back out in many other sides of the fence, and it's become a huge money laundering deal. Well, the Chinese are going after this part of the business. He thinks it will hurt, like win, specifically. Anyway, we'll be back in a minute and go through the rest of the snooze. As we return.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
So anyway, to wrap up the thoughts on Chanos, Chanos was out this afternoon saying short roll-up Valiant and go long Allergen. Probably not a bad bet out here, and the thought is that Allergen will probably do a little bit better as they go to buy them out. But he's basically saying Valiant is doing the same thing, and that most companies like Tyco that are huge acquirers, Enron, all these other accounting gimmicks only last so long. And, of course, it's not like a trader where we think we're going to just go short something because it's going to break then. He has a lot of times waited a year, 2 years, or 3 years to get the huge payoff. I think he was about 6 months early on Enron and basically told everybody they were a fraud and no one would listen to him. But he's always paid off in the end. One of these guys with a very long risk-reward scenario, long-term anyway. Cisco. Cisco was out today, had a nice little bounce. And somebody in the den emailed me or IM'd me or something yesterday when they came out. They beat fiscal Q3 expectations for revenue and profit. Remember, this is a company with a float of about 5 billion shares. They used to have a share for every man, woman, and child alive in the world. Of course, that was when they were really pumping out the shares just before the dot-com bust. But they are doing well on a day that is bad. But here's one of the things that I said, and I just wanted to bring it up. Remember that Chambers is going to be leaving Cisco within the next 12 months. At that point, he's going to want to sell a lot of his shares because my guess is that he's got a lot of problems in the company. He's going to want to make it look as good as possible. So that means cutting a lot of Headsville Road, and other kinds of options to go back and do that. So as he exits stage left, I would not be surprised to see this company, even in a down market, stay up as he throws everything against the wall, including share buybacks, to make sure that this holds up through his exit. But it's just hard for me to think that people are going to continue to spend $35 to $5,000 for routers all these years later. There is a lot of that technology, but eventually all these kind of technologies become commoditized, and I think we're seeing a little bit of that with some of the companies in Europe going after at least the low-hanging fruit in China, and Cisco missed it. But I'm not thinking that this is one of these long-term things where we're probably going to see Cisco hold up until he gets out the door and at least sells some of his shares. Meanwhile, the Hitler Youth member and FCC president, Mr. Wheeler, is approved a plan on a 3-2 vote along lines at FCC that would unleash a new economy on the web, where the internet service providers such as Verizon could charge a website such as Netflix for the guarantee of flawless video streaming. This is the net neutrality issue, and why this rule is not finished. You have basically a time, I think, of 180 days to comment on this rule. It may be 100, but it looks to me like President Wheeler is going to force this thing through. Now, the 20th, they have a congressional investigation on this issue, and maybe he'll take enough heat. But they've pushed it far, basically this far. It's very few times that they back off of it. But I don't know who's bought this guy off, or if they've got pictures of him with some farm animals. But it seems like this guy is fairly tone deaf when it comes to the rule of law. And maybe he just got a big job at Comcast when he leaves. But I'm ready to convict him, and I'm a hanging judge. So we'll look at that. GM more recalls. Of course, more were announced today. I warned everybody a long time ago that the government was pushing this stock up to get rid of it. I think today's additional recalls begs the question: when did the government know all these things, and when did it know, or what did it know? What did it know, and when did it know? The basic Watergate question: what did you know, and when did you know it? And was Mary Barra the patsy for the CEO, for those CEOs before? Interestingly enough, they put somebody in, and a CEO was forced out that wouldn't play ball. He said one bad word about Obama, and it was Game of Thrones head on a spike for him. You remember Edward Whittaker. And my guess is, or my wonder is, boy, you didn't hear anything from him, and he didn't say anything the day he left. Now, maybe he's just enjoying spending his money. I think he's 67 or 70 years old by now. But that'd be the guy I'd want to ask whether or not somebody in the government knew something. But the long knives are out, and it is Game of Thrones times. Of course, GM, they wanted to get all the cash out of the money that the government bailed out on them. They wanted it out because it was an embarrassment to the administration. But I've got a couple of questions out here. I think this is far from over. And I'm pretty sure that when it comes to stock manipulation, that the SEC probably should put a mirror on the door as far as those people that are guilty, and point it maybe over there at the Congress and the White House, because I'm sure everybody knew about these things. I knew about it. I was warning people about it, and warning about the incredible lax lending regulations that GM was getting away with. I think this thing's back down to 28 sooner rather than later. If you are watching the rest of the world, it is going to be an interesting open for tomorrow for world markets. That's because India's elections will be over. They run them for about 5 weeks. I've got a good friend that works for a large company that used to be public that's now private in the computer industry, although I'm not mentioning any four-letter names. But they take, he basically has been telling me, you've been going back and forth. I live fairly close to the airport, and I'll give him a ride over to the airport, let him park his car here so it doesn't get all nasty with jet fuel, and you know, goes out and spends that $200 for parking on some real nice dinners. So it's not a bad deal for us. We just spend that money somewhere else. And it's nice to get caught up from him when he comes back from 25 hours in the air back from India. But most important to me is just how these elections are held. But one of the things he did tell me is the guy that's supposed to win is radically against the U.S., and they were making them park the U.S. jets out in the middle and take a little bus, even though the jetways were available at the airport. So they were doing everything they could to kind of stick it to the U.S. man, even if he was Indian. But we'll see that tomorrow, and I'm wondering if we're going to see any real movement in the world markets. But certainly there are enough Indian stocks traded here in the United States that we might see some movement in those if you keep a close eye on it. And, of course, the IPO du jour, a lot of what I think was the market was pumped up for this week is to get a few of these out. Zendesk actually came out at $9, which was, I think, about $2 under what they were looking at. I immediately jumped and opened at $13.37 earlier as a high. I don't know what it is now. The tech company creates customer service desks for various businesses. It also creates forums that look like regular forums that anybody would build on their website. So consumers can pursue self-help options. Basically, they give something that makes it look like it is a public forum. It's really kind of a private forum where they can control people, what the people actually say about their particular products. So it's better than that than having me run your a company like HP and ratting out all the problems. Maybe General Motors, and I'm the one that breaks the old deal about the key lock. But apparently a very interesting company. But this was one of the ones they were actually trying to shove out the door. It did go out that door. A couple other ones had to be reversed. Even in this climate. So market's still a little bit weak out here. We're off 18 points on the 18.85 points on the SP cash, 2.4 billion shares. So again, I'd like to see 3.8 at just a minimum, 4.2 billion shares, something like that, to really give the idea that everybody's coming in here to sell. And this isn't an issue of options expiration this week. And to me, if we don't get a close below that 1868, I'm looking for us to slowly, continually, a couple of points higher each day into next Friday, kind of that slow move back up. So we'll have to watch it. I'd like to see more companies like IBM and Apple really losing it. And 5.4 million shares on IBM today doesn't really do it for me. It is a mad, mad, mad market. You can give me a call at 877-927-6648 and talk about it. A couple of messages in the den. And one of them was when we were talking about spring-loading stocks. They brought up the CAT buying Prociris and some of these other companies that just seem rather ludicrous at the time. But probably Prociris, those guys are probably still clicking their heels and doing backflips because they sold out right before everything went to hell in a handbasket. But, not new out there. One of the other things I wanted to bring up that I hadn't was Valiant. And a lot of people in Valiant insiders selling. So keep an eye on that VRX. I forgot about that. That was the last thing. It's a mad, mad, mad market, and it's time to start looking at some charts. And that's what I wanted to see is some high volume, especially in these lows being tested over the last few days. We had 11 million shares in IBM at 187 on the April 17th low. I wanted to see that pierce today, which it did, but we wanted to see higher volume. 3.8 million shares today, actually 2.8 million shares today, just doesn't do it. You had kind of got into it on the 7th of May with 3.8 million shares and 2.8 million today. So still a very light volume back here at 187 for one of the weaker companies out here. And with the news in this company this week, if this was going to bust, I would have thought we would have seen a ramp up in volume today. Same thing with Apple. Apple, I think, is fairly weak, but their big pullback down to, what was that last, what was the low day, 580, I thought was setting up an ABC down. And, of course, you're down a little bit today, but 6.2 million shares is not that much. You did have kind of a nice pop-up with 10.2 million shares on the 5th. So I'm really not seeing this whole idea that we are getting lighter volume. I think Apple is going to pull back to this 565 area and at least come back maybe to 550 and fill at least half this gap. The question is, when does it do that? With options expiration tomorrow, it looks to me like they want to pin this thing at 590. But we'll have to see in the morning. But maybe an interesting white lightning trade out here back into it. But again, IBM, what, 5.4 million shares? Is that right? Did I say something wrong there? Yeah, I guess I did. I don't know why this says 2.8. IBM, I've got the other quote out here. Oh, is that right? IBM. Yeah. Oh, what's right? I don't know what's wrong here, why that volume is different. But still not 11 million shares, so that's all that matters out there. Of course, some of these big movers of the last few days have been in this sector of 3D printing. After last night, X1 was the next one to take the long knife. This is going after this $24.34 low from April 15th. Had 500,000 shares there, 1.2 million shares already today. I think you can make a fairly good case that 24.34 is going to get tested sooner rather than later, and we'll be watching that. Again, you can give me a call at 877-927-6648, or you can email me at path@tfnn.com. Okay. Okay. And I got an email here, but it's not really a question, so we'll go on. But thanks, Dave from Oklahoma. Let's see what else do we have. ABC, looking at a few other stocks here. We'll be back in just a minute. We'll take a look at a few more. Oh, I didn't bring up the chart of Cisco. Got to do that. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, during the break, I IM'd Andy and asked him if there were any changes out there in the Indian elections that could change commodities. Maybe he'll bring that up on his show. But he likes all kinds of stuff. Yeah, let's see what he had here. Say, wheat's close to a buy, hogs close to a buy, pork, sugar, coffee, wheat, cocoa sounds like a full meal. So we'll hold him that to give us a full feeling by the end of his show on all those wonderful soft commodities that he likes to talk about. Anyway, as we're looking at the end of the day, again, what I'm watching for is a close above 1868. This just means we're in a higher trading range between that 1868 and the 1998 kind of area, I suspect. I could see us just going sideways here for another week, driving everybody as batty as possible. We're just off 17 points now on the S&P cash, almost 10 points off the low on the S&P. 2.5 billion shares. So, again, we get into this kind of day. The volume is light till about 3:30, 3:35. We get that on market on close orders, and we just don't get a whole lot. And it's going to be very tough, I think, other than maybe for some intraday short squeezes to actually play. I already got my finger slapped for one. Thank God for tops. But it is what it is, and that is we've got a lot of stocks that are probably have too high of short interest, and I think it's going to take some spikes to set the high. That's what I'm hoping, because I'll be looking at shorting them. But stocks like Netflix, there's this nice kind of little gap up here at about 365, 370, and I would love for Netflix to get back in there. This energy is not very exciting, all the way back off this 299.50 low. And of course, we've reveled about how Netflix came off the top in this one, and it's a 3-gap play. You've got 2 major gaps below it that need to be filled. Tesla, some of these other ones out here that certainly look like they could be filled. So we'll be keeping a close eye on those. But to me, if volume goes light, we'll probably see that short covering thing where you just see these stocks up, $5, $6, down $1, up $5. It won't be a huge move each day, but it'll be just enough to squeeze most of the shorts out before the long weekend and bore them out. Shorts are always the weakest hands, and even in a bear market, actually very tough when it moves against them. They are 10 times more likely to make an intraday trade than a long, and you're just not ever on the strongest side when people are short. Jim Chanos as an exception, but they tend to be the fast money crowd. So you have to be even faster than the fast money crowd to be short these stocks. And I would just say, statistically, going into summer trading, going into a big, long 3-day weekend, and much lighter volume, one of the old tenets, the old chestnuts, as they say, that you want to dust off is don't be short a quiet market. And why today is not quiet, I think we're probably going to start the quiet market, I don't know, probably about 1 o'clock tomorrow afternoon. It's going to get ultra quiet. We're going to hear the crickets probably next Wednesday. And that will be everybody already trying to exit out the door off to the Hamptons and enjoy their palatial mansions. Look for summer trading to re-emerge after that long weekend. And I think maybe that's where it'll be time to set my hook once again. Anyway, want to thank everybody for listening. I enjoy all my faithful listeners. Look forward to Andy following this show over most of TFNN. See you tomorrow.